and welcome to our podcast, Decoding Financial Reporting Standards, Cases, and Real Life Applications. I am Angelina, and today we are diving into the fascinating world of corporate accounting and financial reporting. Whether you are a student, a professional, or just someone curious about how businesses manage their finances, this podcast is for you.
Hi, I'm Maria and I'm excited to be co-hosting this episode with Angelina. Today, we will explore advanced corporate accounting topics, analyze real-life case studies, and discuss how these concepts apply in the real world. We have a fantastic team with us today, so let's get started.
Thanks, Maria. Let's start by introducing our topic for today. Accounting standards in financial reporting. Accounting standards are like the rulebook of businesses. They ensure consistency, transparency, and comparability in financial statements. Without these standards, it would be chaos.
That's right, Devi. One of the most widely used set of standards is the International Financial Reporting Standards, which is IFRS, adopted by over 140 countries. For example, companies like Tata Motors and Infosys use IFRS to prepare their financial statements. These statements help investors, regulators, and the public understand a company's financial health.
So another important standard is Ind AS, Indian Accounting Standards, which is based on IFRS but tailored for Indian companies. For instance, Reliance Industries and HFC Bank follow Ind AS to ensure their financial statements are transparent and globally comparable.
Now that we've covered the basics, let's dive into a real-life case study. The Satyam Scandal. Satyam Computer Services, an Indian IT company, was involved in one of the biggest accounting frauds in Indian corporate history. The company inflated its revenues and profits by manipulating its financial statements.
Exactly, Alvin. Satyam's downfall was a wake-up call for the Indian corporate world. They falsified cash balances, overstated revenues, and understated liabilities. This scandal highlighted the need of stricter accounting standards and better enforcement in India.
To prevent such scandals, regulators in India introduced stricter auditing norms and strengthened the role of the Securities and Exchange Board of India. Companies like TCS and Wipro now follow
Great analysis, team. Now, let's connect this case study to real life experiences. Devi, can you share an experience where accounting standards played a crucial role?
Sure, Angelina. I once worked on a project where a company struggled with revenue recognition under Ind AS 115. They were recognizing revenue before fulfilling their contractual obligations, which led to inaccurate financial statements. After proper training and compliance, they were able to correct this issue, ensuring investors had a clear picture of their financial position.
That is an excellent point, Devi. Another case that highlights the importance of accounting standards is infrastructure leasing and financial services. This company collapsed due to poor financial management and lack of transparency in reporting. They had hidden their financial registers for years, misleading investors and regulators. If stricter accounting practices had been followed, this crisis could have been prevented.
Now, let's look at companies that are implementing accounting standards correctly. Devi, can you give us an example?
Sure, Angelina. Take Tata Steel for example. They follow Ind AS to report their revenue and expenses. Under Ind AS 115, they recognize revenue only when control of the product is transferred to the customer, ensuring accurate financial reporting.
Another example is Hindustan Unilever. They use Ind AS 109 to classify and measure financial instruments like investments and derivatives. The standard ensures that their financial statements reflect the true economic value of these assets.
And let's not forget Mahindra and Mahindra. They use Ind AS to report revenue from long-term contracts like vehicle sales and after-sale services. By following Ind AS 115, they ensure that the revenue is recognized accurately over time.
These examples show how important accounting standards are in the real world. But why should an average person care about the financial reporting?
Great question, Maria. Financial reporting affects everyone. If you are an investor, accurate financial statements help you make informed decisions. For example, when Infosys reports its earnings, investors use this information to decide whether to buy, hold, or sell their shares.
Plus, understanding accounting standards can help you to spot red flags in financial statements. If a company's revenue recognition practices seems inconsistent, it could be a sign of trouble. Just like in Satyam's case, companies like Asian Paints and Maruti Suzuki follow strict standards to avoid such issues.
Let's not forget the role of technology. With tools like AI and blockchain, the future of financial reporting is becoming more transparent and efficient. For instance, ICICI Bank uses blockchain to improve the accuracy and speed of its financial reporting processes.
Wow, what an insightful discussion. We have covered accounting standards, analyzed the Satyam scandal, explored the IL&FS case, and discussed real-life examples from companies like Tata Steel, Hindustan Unilever, and Mahindra. I hope you have learned something new today.
Absolutely. A big thank you to our amazing team Devi, Chesney, Advait, Albin, George, and Adeline for their contributions. And thank you, our listeners, for tuning in. Don't forget to like, share, and subscribe for more content on corporate accounting and financial reporting.
And with that, this is Angelina signing off. One last time, thank you. Thank you for being part of this journey. Thank you for listening, for making this experience unforgettable.